Welcome to today's video where you are going to learn the trend channel breakdown pattern and how to develop your own strategy around it. But before we get into this video, only about 31% of you all watching this are actually subscribed. So if you like learning how to trade, make sure to click that subscribe button. This is still forming that trend channel. Let me draw this in for you. This trend channel here, bouncing up and down, up and down, up and down, and it's breaking under. We don't want to just see a break under because you can see it's done that before. Those are wicks breaking through. We want to see a break under, a close under, which we did just get, and then a pullback, testing the lower trend line from below, and then a continuation down. We want to see this pullback to test the lower trend line from below to pretty much confirm that the price action is now stuck underneath the trend line. Like if the price comes down below a trend line and it doesn't confirm, it could just slip right back up and form a wick and come right back up. But if it comes under and then it tests it from below and gets rejected from below and then curls and continues back down, then you know that it's stuck under and is continuing back down. And that is actually what we get right here. We have a test, so we have a breakdown, we have a test, which we might get a green candle, but this still did test on a wick and then came down further. It would be cleaner if it was a green candle, maybe a doji and then a red candle, something like that. But we're looking for something like this, a breakdown and then a pullback and a test from underneath, because this test from underneath is what's showing that it's not just poking through that support level and it's just gonna slip right back up, but that it's actually stuck and confirmed under. And then we want to see a continuation coming back down. And this is how you properly trade a trend channel breakout. So this is breaking out of the trend channel. You can see that's happening perfectly live right now. We have the breakdown, and instead of just coming right back up, it's bounced and it's tested. Literally the wicks have tested perfectly. Let me zoom in on this. The wicks have tested this trend line perfectly here and here. I'm not making this stuff up. I've been doing this for a while. And then it's breaking down that previous low, which is right here. And so if you're trading this just outright, your entry would be under this previous low. Your entry would be here. I'm gonna draw this in here and make this yellow for your entry. And then if you wanna know how to manage risk with this, so that's your entry because that's the breakout point. That's the confirmation that this is rejecting the trend line and coming back down. That's the confirmation you wanna get in once it's confirmed a direction. Not that it's guaranteed to continue in that direction, but the probability of it continuing down after it broke under this previous low is higher than the probability of it randomly coming back up. Your stop loss, I'm gonna keep red here, this red line here. That's the previous high. You ask yourself when you're setting a stop loss, at what price would I no longer want to be short in this stock? Before you get in the trade, you're asking yourself that. My answer is if it breaks this previous high, I would no longer want to be short in this stock because that's breaking a previous high, which means this is starting an uptrend and I don't want to be short in an uptrend. Then your target is going to be the next support level. If I was looking at this, I would put it here, the bottom of these three candles, low of the wick, bottom of the body, these wicks poking at it. And that's at least 1-to-1 reward to risk, yes. So there's your trade, easy, quick, simple. But the great thing about it is it's now trending down at this point, setting a lower high and a lower low. You can see the lower high here. Here's the previous high, lower high. Here's the previous low and a lower low. It is now trending down. It has confirmed it's trending down. So it's likely to break through the support level. You put this here just to be able to calculate the minimal reward to risk, to make sure that this is at least worth the risk, that your potential reward is at least worth the risk. If it does come down, test the support level, bounce off of it, reject it, that it's at least worth the risk. Now, it might not even come down and test this level. That's fine. That's why you have a stop loss in place in a trade example like this. There's no strategy that has a 100% win rate. Do not trust anybody that says their strategy has a 100% win rate. But this isn't even just a strategy. This is simply a pattern. This is a trend channel breakdown. You see it's breaking down out of a trend channel. This is an upward trending channel. We got the pullback, we got the retest of the channel from outside of the channel. We could see the price is stuck out of it and it broke down. It is now trending down, lower highs, lower lows. We have our first target here. This is going to be a mental target because we expect it to trend down and continue down. My actual target in this stock today is down to 650 because that's a support level from the past few days on the 4-hour and the 1-hour chart. So that's just a quick example of a trend channel breakdown and how that strategy works. Thank you all for watching. Let me know down in the comments if you learned something from this video.